What's going on, guys? Don with Life After Serving, and today we're talking on home buying and specifically using the VA mortgage to purchase and buy a property. I've used it a few different times. I've used it to not only buy a couple different properties in different states, but also used it as a refinancing product as well. So I'll talk on some of my experience with that and some input there. As well as some information that I've found online and va.gov, their website, and some information that's out there. So who can actually use this VA product? Those that have served for 181 days active service during peacetime, serving 90 consecutive days active service during wartime, having served 90 days under Title 32 and at least 30 consecutive days, or having served more than 6 years of service through the National Guard. So essentially, most of your active duty members, by the time they have served their 2 to 4 year contract, they've met the requirements. Those that are reservists, obviously, you've got to think about some of those other bullet points that were mentioned there, making sure that you've either had some active time involved and you've met the requirements. With that said, some things that people do not necessarily take into consideration when they're using this product, but should. There is some cost associated. So when you do an appraisal, you may have that cost associated that you will have to put up. You may have a down payment that you choose to put down, depending on what you're qualified for. You may have that to where you have to put a down payment to keep it under your loan limits of what you've been pre-approved for. If you're doing inspections, so for instance, the property that we have now had to have a well inspection, had to have a septic inspection. Those inspections all had to be paid for out of pocket. So that said, sometimes depending on the market, some of these things can be covered by the seller or seller concessions. Same thing with closing costs. You need to think about what that looks like. If there's a closing cost associated, are you going to pay all those closing costs as a buyer, or are you going to be able to have the seller cover some or all of them? That's probably one of the biggest expenses that people don't think about. They think or hear zero down with the VA, and they don't think they have to put anything down or any costs associated with it to close on a property. Not necessarily the case. If you're using it and you do not have a service-connected disability, you may have a funding fee. And those funding fees, as it currently is today, I'm going to pull up the VA's website, anything from 1.4% to 2.3%. And that fluctuation is dependent on if it's your first use, after first use, and then how much of a down payment you have. So if you have more than a 10% service-connected disability, you can do a waiver to potentially waive that funding fee, which obviously, depending on your purchase price on the property, is going to be a significant amount of money, a couple $1,000 potentially, that you may have to come up with to close on that property. So between that, closing cost, your inspections, etc., you could be talking anything from a couple $1,000 all the way up to, potentially $15,000, $20,000 if you're up in, let's say, California, Hawaii, and upper end expense for a $600,000, $700,000, $800,000 property, or $1 million plus if you're in Hawaii, to get into some of this stuff. So make sure that you know what that looks like. If you do have questions on that stuff, feel free to reach out, whether it's myself or we do have some points of contact that are very well versed in this. Looking at a property, I would say one of the bigger things is a real estate agent that is very familiar with the VA mortgage and what timelines look like, what that requires, what happens if the appraisal comes in low. What are your options? Do you walk away from it? Do you invoke Tidewater? Do you potentially ask for the seller to cover costs? Those are all things that if the real estate agent has been using or has gone through the VA closing process, they may know these things up in front. So very important that they know what that looks like. On the mortgage side of things, not all mortgage lenders or providers are all the same. There's many out there that have the big name behind them, but not necessarily who I'd necessarily recommend using. you can certainly reach out. We are going to have some different providers that will give contact information, and then you make your choice. Obviously, we're not going to direct you in one specific, but there's a couple different ones out there. For us specifically, I can tell you I did use one of the big name brand lenders on the first property that we bought, and my experience was not good. That doesn't mean that there aren't some that are great, but for us, it seemed like they were missing closing dates. They were not very good at communication. It was hard to get a hold of people. Magically, we could get a hold of everyone when we were initially trying to get a pre-approval, but then when we were getting into closing and we're within a week, a couple days of closing, it was very difficult to get a hold of these mortgage people. That said, these last couple times that we've purchased in this property that we're in now, we used a mortgage broker, and they are local to this area. I am waiting to hear where they lend and do. If there's multiple states, I'll put some information out there. But that said, they were the best experience we've ever had out of the multiple properties that we bought and refinances that we bought. They were very communicated. We could get a hold of them. If it was something coming up, we could reach out, and within 24 to 48 hours, we had a response. We weren't waiting days, weeks to get responses and or radio silence when it was important to know what was going on. So those are just some things to think about. With a VA product, I'm going to pull up something here. Funding fee exemption we talked on, something to think about, state property tax exemption. So I'll do some more videos more in depth on this, but I can tell you I know that there are states where if you are 100% specifically, in some states like Wisconsin you don't have to be 100%, I think it starts at 70%, you have a potential to be property tax credit exemption. So Wisconsin, it's dependent on your percentage, how much you get. It's the personal residence, the property itself, and the first acre. I found this out the hard way because we have multiple acres and we have an outbuilding. And initially we thought that everything was covered. We found out that it wasn't. It's the first acre and the personal residence or property itself. Texas and others have to where they completely waive property taxes potentially depending on your rating. California does similar things. Again, I'll go more in detail on some of the stuff in other videos, but things to think about. Now that said, typically you do have to be approved for what that dollar amount would be to pay your taxes plus your mortgage for the VA, and then if you get it back or you get exempt, that's just a bonus. So you still have to have the income, debt to income ratios usually to be approved with having to pay that, because most of the time you have to purchase the property, and then thereafter purchasing you apply or provide the information to the county tax assessor and other offices to get that tax exemption on the property taxes. Counting your VA disability income. If you're getting compensation from the VA for a disability, oftentimes you can include that in your monthly income to be debt to income ratios of what you want to be pre-approved at. If you are dual military like we are, some things to think about. If you are married, understand or ask what that looks like as far as using your certificate of eligibility, and whether both veterans have to be using part of their VA mortgage and their disability, or sorry, their certificate of eligibility. If you're the member and married, you have to use obviously your certificate, and then you have to figure out, does it make sense to use husband or wife's income as well? Sometimes this is dependent on them having good credit, bad credit, whether or not you want them as part of the pre-approval process. These are things to think about. Let's see, Special Adapted Housing Grant, SAH. So if you have an underlying disability, there are different grants out there, such as SAH or SHA. There are two different ones there, and they allow for different qualified amounts depending on what your disability might be. You may be able to get these grants to put in things like wheelchair accessibility, handrails, handguard, things into the property. They also have the HISA, which is the Home Improvement Structural Alterations Grant. Again, I will provide some links in here, but dependent on your rating with the VA for your disability, some of these things come into play or do not. So take a look at those. temporary residence adaptation, or TRA, is another grant. All right. Some things that you should consider when you're doing this stuff. If you're purchasing a home that meets the VA guidelines and requirements, doesn't necessarily mean that it's not going to need some things. I can tell you from personal experience, the property we purchased here was built in 2001 and literally had nothing done to it when we bought in 2020. What did that mean? Things like water heaters, air conditioners, HVAC, roof. They were usable and they were within life, but they were to the point of they were no longer energy efficient and they were on their last leg. So, you know, if you're looking at properties that haven't had certain things done to them in a long time, look at some of those dates, such as the date of install on the HVAC, the water heater, the air conditioner, how long ago did the roof get done, etc. Because these are some costs that are going to come up, and you know, typically we're not talking a couple $100 here. We're talking a couple thousand, and if it's a roof, very easily $10, $20, $30,000 that you may have to have, and obviously you don't want to get into a property and then have to spend all that or not have that to spend. So think of those things. Before closing, this is a huge one. Before closing, they're going to often tell you, mortgage brokers are going to tell you, do not buy anything big, aka do not go out and buy a new car, do not go buy a used car, do not get a personal loan, do not have random dollar amounts that are, you know, larger amounts. And mortgage brokers, who you should ask about this, but you know, $1,000 plus just randomly coming into your account and then you're using that towards your home loan, that's going to be a problem if you don't have some type of gift receipt. Credit cards, doing cash advances on credit cards, going and buying furniture before you close. All these are things that happen and will drive a mortgage broker nuts, and sometimes can make it to where at the very least your closing is going to be delayed because you're going to have to go back through underwriting. And the very worst is now, because of that debt that you've incurred, you no longer qualify for the property and you're not going to be able to close. So think about those things before going out and buying any large ticket items, getting new credit cards of any sort. And this is, you know, cell phone bills, anything else that pulls your credit. Do not go out and do this stuff right before closing. Once they've pulled your credit and done the pre-approval, hold off on all that stuff until you're done. Okay, let's see. Some advantages of the VA's mortgage versus some of the others. You don't necessarily have to have a down payment. You can get those seller concessions. Interest rates are oftentimes lower than many of the other mortgage products that are out there. Mortgage insurance. So if you have an FHA type and you're above 80% loan to value, oftentimes you have to have mortgage insurance. This can be a couple $100. This can be $1,000 plus on your mortgage payment each month. So using the VA product, you don't have to have that mortgage insurance like that, and you can save obviously a couple $100, a couple $1,000 every month. So those are just some advantages of using the VA. You do not have to be a disabled veteran. It's the qualifications that I mentioned earlier, and as long as you've met those, reach out and a mortgage broker can help and assist. If you need any help or assistance finding some, I've got points of contact, different groups that are specific to this. Obviously, I'm giving some basic information here, but I do have points of contact in Facebook groups and some other things that this is all they do, and they're very highly qualified, and they provide actual information that is straight from the horse's mouth. And these gals are mortgage brokers that handle this stuff every day, and that's what they specialize in, is specifically in the VA home mortgage business. So reach out if you have questions. Obviously, you can send a comment on the video. You can reach out via email, lifeafterserving@gmail, or the socials on Instagram and Facebook, Life After Serving. Twitter is Life After Serving as well. And then TikTok, last but not least, is DonaldRoss_LAS. If you guys need anything, reach out. I do take into consideration any comments, questions, concerns you guys have on some of the videos and things that we cover. So we'll continue on talking on this product and some of the different things that I mentioned here more in detail in other videos, but this should give you at least a basic overview of it. All right, guys.